This is a fairly nasty crypto market at the moment. We can see altcoins keep extending their losses. Bitcoin looks extremely shaky, and a lot of people are now calling for the end of the bull market or the beginning of the crypto bear market. But instead of burying our heads in the sand today, I want to actually go through the variables which are impacting the market to the bearish side and also to the bullish side so we can work out what we should do as investors. I'm going to run you through every single factor which is impacting the market right now of note. And then I'm also going to do some analysis on the Bitcoin chart to work out how we can evaluate this current situation, because you can see on the H4 and the daily, we are starting to get major breakdowns. On the weekly, we are starting to get a major retest. On Ethereum, we have broken down past the line in the sand, which was $4,000 that we've spoken about on the channel many times. So we need to go through all of this and more today. So sit back, relax. It's going to be a pretty informative video, a very candid video, and we're going to go through all the points that matter here today. So without further ado, let's get straight into it. And if you want updates throughout the week and obviously well into the future, make sure to click the subscribe button and hit the post notification bell to stay in the loop here. So let's firstly answer the question, is the crypto bull run over? Obviously, it's not a black and white thing though. It's a probability. So you need to assign the probability that you think is realistic for the crypto bull run being over given the current variables. So what I want to do today is give you those variables so you can make a more educated decision. And then we'll talk about what you can actually do based on the charts and based on the current trend of the market as to whether you should be buying altcoins, as to whether you should be de-risking altcoins, and as to where you should be spending your time in this market right now. So I'll start by saying this is probably the worst sentiment I've seen since FTX in 2022, even though the price capitulation is nowhere near as bad as FTX 2022. The market seems to be a lot more depressed. Now, there are many reasons for this, but I think the extended underperformance of altcoins versus Bitcoin throughout practically the entire cycle, but especially this year, alongside the time capitulation that we are currently experiencing from Bitcoin chopping essentially for over 100 days in this range whilst altcoins bleed, has led to the degradation of sentiment. Sometimes time capitulation is a worse thing than immediate price capitulation because it's basically like a slow bleed where you have continuous pain over a matter of months, as opposed to events like FTX, which were just like pain in one day, and then the market put in a low and then started to recover. Don't get me wrong, 2022 was painful, very painful, probably more painful for me personally financially. I mean, I lost a lot of money on Luna, I round-tripped a lot of gains, and it was just really depressing. But the sentiment this time around, like objectively looking at it, is actually worse because you have genuine retail capitulation. In 2022, there was still a lot of active retail who had gotten into the space in 2021 who actually stuck around and it was their first bear market. I think a lot of people now that are facing the potential of their second bear market are essentially capitulating and deciding to give up. And to be honest, if you feel like giving up in this market, I certainly don't blame you. Do I think it's the positive EV decision to make? No. And I'll get into some reasons later in the video, but I certainly don't blame you because this market is really hard and it's been tough for me personally. I put out a video on my second channel yesterday about how frustrating it is just to be like treading water despite, working really, really hard and to not see the results financially. That is, a really difficult thing, and it definitely takes a lot of patience and a lot of grit. So I want to go through the bear case now. What are the reasons why people are saying the bull run is over, and what are the reasons why people are feeling bad about the market at the moment? So firstly, Bitcoin OGs have been selling. We know this because there's been many old wallets which have been offloading Bitcoin. Many whales have been selling. We've specifically seen a lot of whales selling in the Asian markets. We've seen the Asia session be notoriously bad for markets over the past few weeks, which leads to the assumption that there is a big contingent of Asian investors in Bitcoin and traders that have been offloading, and potentially funds that have been offloading as well. This is combined with ETF flows ticking negative. This isn't an institutional signal. It's more of a retail signal in my opinion, but that has put pressure on the market. You've got to remember the big catalyst for Bitcoin's massive run-up that we saw earlier in the year was driven by two things. One, ETFs, because the ETF was the strongest ETF since the gold ETF inception. In fact, it had well outperformed the gold ETF. So that was, giving Bitcoin a lot of buy pressure, combined with the DAT narrative. So treasuries were not only accumulating Bitcoin, but there was a narrative that they would continue to accumulate Bitcoin and manipulate price upwards. And then there was also the strategic Bitcoin reserve narrative, which really helped Bitcoin run from this level here in July, this downtrend, which was also pretty painful, by the way, into the next leg here, where Bitcoin, put in a very strong leg. That was the strategic Bitcoin reserve narrative before we saw a top on Trump's inauguration, a downtrend, and then, the DAT and the ETF narrative took the market to new heights. I think the treasury buying, was a massive factor. But just as that was a reflexive factor to the upside, we're now seeing it as a reflexive factor to the downside. So ETF flows are now stalling, hence prices unwinding, and the DAT narrative is also stalling. So the reason why the market was going up and up and up is now no longer a reason for the market to go up. In fact, it is a slight net negative at the moment because some of these DATs are actually unwinding their positions. Now, it's mostly the small and mid-sized DATs, but it does point to the fact that it's not all sunshines and rainbows when it comes to these treasury vehicles. They also need to unwind at times in order to get their stock price closer to NAV so they can raise again, so they can continue running the playbook. But since it's exhausted and since demand has dried up for the DAT assets, both in the equities market and demand also for Bitcoin on the retail side, this has opened up a slight risk for the market. And this tail risk extends beyond the smaller mid-sized DATs and also to the larger DATs where there's now speculation that some of them could potentially start selling Bitcoin. Now, I don't think MicroStrategy is going to start selling Bitcoin. The probability of that is extremely low, at least in the next few months, but it is a tail risk, which is evident now that wasn't maybe a few months ago, and that's one of the reasons why you're starting to see Bitcoin cool off. Now, here's the elephant in the room and the real reason why sentiment is so bad. And by the way, if you think I'm painting a grim picture, I'm just going through all of the bearish factors right now. Then we're going to get into the bull case because, believe it or not, there are still bullish variables at the moment. And then I'm going to get into what I think you can do right now. So the real, I think, dagger for a lot of retail investors specifically, and even myself at times this year, it's been frustrating, are altcoins underperforming BTC. So the entire cycle they've been underperforming. Yes, there's obviously been pockets where we've seen extreme altcoin outperformance. If you go onto others BTC, there's been a few of note. Obviously, we saw that November period, December period into Trump's inauguration, which was crazy. That was personally one of the craziest periods for me. We saw earlier that year in the February, March, April period before, things started to cool off. That was a pretty insane period as well, specifically for like the AI coins, the RWA coins. So these two runs were really prevalent last year. Then we saw a little bit of a pump as the Ethereum treasury narrative started to take off and a lot of the ETH betas run, but every pump gets smaller. Like this leg on others BTC, which is the alt index versus BTC, was 70%. The next run for altcoins was 56%, and then the most recent alt season was 40%. So every single time that alts pump, you get diminishing returns. So what's happened is a lot of altcoin investors are just exhausted. Even when alts pump, they barely pump, and you have to be in the right assets to actually get exposure to that pump. Because if, for example, you weren't in meme coins last year, you would have missed out on a lot of the gains if you were just in, old utility coins. And if you weren't in utility coins in the last run or ETH betas and you're in meme coins, then you would have lost out on a lot of the gains during that run. So it is a game of hot potato, and it's harder than ever to actually hold altcoins long term. And we've been saying this on the channel for a long time, like condense your altcoin holdings down, hold fewer altcoins and manage those positions more closely with invalidations, and don't spread yourself too thin. But it's still been a hard game, even if you followed that playbook. I think the invalidations piece is so important in the altcoin market because it's going to protect you from a lot of pain. For example, I did this post in my Discord 5 days ago. I said, I'm noticing a lot of charts are breaking down from their high time frame levels. It's triggered a few partial stops across my positions. For example, Link, ENA, Eigen, MNT, when I started to notice the market breaking down. I invalidated MNT at like $1.50 or partially, not all of my position, but now it's down to what, $1.20. Eigenlayer, same thing at roughly like 93 cents. Now it's 75 cents. And, it was the same story in Link, same story across a variety of my positions. So, even I get invalidated. And it kind of sucks to get invalidated, but at least it's saving me from holding a bloated portfolio and catching a knife during this period. So I think it's very important to have these invalidations set. Hopefully, 5 days ago, I was able to save some of the Discord from some pain and they could have reviewed their own portfolios and invalidated some of their own positions as well. But I think it's so important to actually have invalidations for positions because at the very least, you can get back in on a reclaim. Like M&T, if you get a structural reclaim, I'd love to get back in once the market shifts its low time frame structure. And we're going to go through the structure on Bitcoin in a few minutes here. Same story with Eigenlayer. I think the narrative is extremely strong. I'd love to get back in. I just need to see the market flip again. So I don't think there's anything wrong with partially invalidating and then getting the position that you sold back into the market on a sign of strength. There's nothing wrong with that. But going back to the point here in the bearish variables, alts have been underperforming Bitcoin. That's caused a lot of pain. And without going through a lot of the reasons why, I'll list a few of the major ones. 1, dilution. There's too many altcoins. 2, many extraction events, for example, Trump coin. 3, inflated valuations across the board. Many alts have fugazi valuations and they simply launch way too high. 4, there's been a lack of true PMF and innovation this cycle. 5, there's been massive time exhaustion, which we discussed. And all of this has combined to result in severe underperformance and the most rotationary altcoin market that we've ever seen. And I think the nail in the coffin was for altcoins was the 10th of October's liquidation event, because people were already feeling frustrated with altcoins. Most people had already left. The ones that were still there were reminded how thin the liquidity is on these altcoins. I think, and I said this at the time, that event kind of lifted the veil on the market and made people realize, wow, liquidity and demand for these alts is probably a lot lower than the market caps were suggesting, because liquidity isn't equal to market cap. So that, combined with the material unwinding that we've seen from some market makers in the aftermath of that event, have resulted in what's been quite a damaging event structurally for the altcoin market. And I said this at the time as well, it's going to take some weeks, potentially even months, to recover the damage that was done on that day. And that is a difficult thing for market participants because, once again, it's causing underperformance for an extended period of time. And then the other nail in the coffin has been the equities market doing so well. I mean, look at NDQ, look at the S&P. It's been difficult because obviously altcoin investors, but even Bitcoin investors have been underperforming equities. And you have to remember, crypto is a retail-driven market in terms of flows. Retail need a reason to get into crypto. And in 2021, that was like the hottest basket where they could make the biggest returns. That's why they were going all in on crypto. But right now, the stock market is more PVE. Crypto is more PVP. So it's easier just to chuck money into an AI low cap and make money if you're not very skilled. So for a lot of people, a lot of passive investors, it has just made more sense to park money in equities. And they haven't really had a reason to rotate into crypto. Trust me, if Bitcoin was pumping and alts were flying, people would be rotating their equities into crypto. Retail always wants to participate in the hottest basket. I mean, you even saw this with gold. People were lining up around the block to buy gold a couple of weeks ago. But that same reflexivity works to the downside. When a sector isn't hot like crypto right now, there isn't that demand to come into the space. And that has hurt the market because a lot of the crypto investors have seen how well equities are doing, and it's very disheartening. Like, it's disheartening to have these positions that are going down or chopping sideways when you're seeing this other sector flying. But, I don't think you're also in a weird position because I think now is actually not a great time to rotate back into equities. If anything, I'm more interested in rotating equities back into Bitcoin and then working down the risk curve on alts. But we'll discuss how you can do that in a couple of minutes here. So all of this paints potentially a grim picture. And in many ways, it is on face value. And these are the reasons why the altcoin's dropping. Let's not bury our head in the sand. Let's discuss the reasons, because we can't just sit here and be like, oh, why hasn't there been an alt season? Like, there are many, many reasons, which we've also been discussing on the channel the entire year, but over the last month especially, why the altcoin market has been weak. However, for us to come up with a probability to assign on the bull market being over, what we need to do is look at the bullish variables as well. Because believe it or not, this isn't a black and white market of everything's bearish. If it was that simple, I would just say sell everything and short the market. But the reality is there are some bullish variables as well, and things that can very quickly change the market that could potentially result in some shorts getting wrecked. If you're too overzealous on shorts, just like if you're too overzealous on longs, you can also get destroyed. So let's discuss some of the bullish things to get excited about, or at least keep in mind. Firstly, Bitcoin, and this is where we'll go through a bit of a technical analysis on Bitcoin, is still structurally intact from a high time frame perspective. So we'll start on the weekly. On the weekly, it's testing the money noodle, and there's a very similar chart at the moment for the 50-day moving average and the 200-day moving average. But the point is, every time we've had a test of this zone since the bull market has begun, this has been a buying opportunity resulting in a big rebound. If you remember my video from back in April 6th, when the tariff stuff was announced, I did a video in the sauna. I said, I'm loading up on a bunch of Bitcoin and equities here. And that was pretty much the best time to buy Bitcoin in the cycle, since July last year. So once again, we're coming into this zone. We actually haven't broken down yet. And this zone for me is somewhat of an invalidation zone, considering it's not only the noodle, you have the 50-day and the 200-day MA all around this region right now, if you want to overlay the charts in your own time. On the monthly as well, because I know not everyone likes moving averages, and I think there's definitely, something to be said for, horizontals being more important than moving averages. If you want to draw in your monthly low and your monthly high, you are just at the bottom of the range now. Potentially we see deviation below, but we actually haven't broken down below range low, even, depending on how you want to draw it, because some people might take this zone here, the 100K zone, as support. But however you want to draw it, we know that this zone in here is support. And that also obviously lines up with the weekly trends that we were discussing. This entire zone is support. So if you are getting extremely bearish now, that's fine. Just be aware of the fact you're extremely bearish into Bitcoin support. And I think the 98K retest is going to tell us a lot about Bitcoin and its health for the cycle overall. But obviously some of the factors I'm going to discuss now have a macro backing to that theory. There's been no true euphoria-based signals that have been present this cycle to suggest a top that were prevalent in the last cycle. That's also something to consider here. I'm not saying every top needs to be created by euphoria, but we haven't seen those signals, so it would be an anomaly of a cycle. That's just one thing to keep in mind. The next thing to keep in mind is that quantitative tightening is ending. Now, this doesn't mean quantitative easing necessarily has to begin, but it is the first step to pave the way for that in the future, potentially. So don't get excited about easing yet, but QT is at least over, so they're not constricting the monetary supply anymore. But I think more importantly are the next 3 points. One, the business cycle's still going. There's no clear top on equities, and Bitcoin has historically re-correlated with equities after periods of skew. We know year to date, Bitcoin has a 0.75 correlation coefficient with equities. It's extremely correlated, and it has been underperforming. We've typically seen it re-correlate in the past when it has been underperforming. That doesn't mean it needs to re-correlate right now, but when we're building the bull case, it's something to be aware of. The next point is, number 2, rates are still coming down. This isn't an environment where we're front-running the raising of rates. If anything, we need to have the anticipation for rates to continue to come down. And this leads on to point 3. Trump is very clearly incentivized to keep pumping markets. And he doesn't want to see the stock market drop. We've seen that pretty much every time there's been a suggestion of tariffs. They've ended up coming to some sort of trade deal. And we know that with the new Fed chair coming in and likely what's going to happen there, monetary supply is likely to be less restrictive than previous regimes. And this is something Raoul Pal actually tweeted about. He said, our work, obviously referring to Real Vision, probabilistically speaking, suggests that the cycle extends into Q1 2026 and possibly into Q2 2026 due to slow business cycle forcing more liquidity for longer. This is one of the most extended business cycles ever. I mean, it could end up being one of the biggest bubbles ever, but that also means that there could still be upside. Yeah, you might see periods where equities cool off for a bit, and I think there's some sort of suggestion that Bitcoin might be front-running that at the moment. But if we do extend to new highs in the stock market, which is, I think, likely heading into 2026, given how the current macro backdrop looks, you'd have to anticipate at some point Bitcoin would catch up. And if it does catch up, we know how quickly sentiment can turn. Let's be very clear here. The reason why altcoins are so bearish is because they're also front-running or acting as an extension of Bitcoin weakness. If Bitcoin goes on a big rally and retests all-time high again, well, you'll likely see sentiment turn pretty quickly for altcoins as well. They're extremely reflexive devices. So yes, that means if Bitcoin continues bleeding now to 98K, there's going to be more pain on alts. That's also why I've had some invalidations across my portfolio. But that would probably represent a decent risk-reward opportunity with invalidation to run that next leg up where alts are also reflexive to Bitcoin. You just have to be aware of a couple things. Firstly, Bitcoin dominance continues to climb higher, so it's likely that balance of probabilities, Bitcoin actually leads the next run. Obviously, there'll be some alts which outperform, but overall, Bitcoin should lead the next run. And the other thing is we haven't seen an established uptrend on others BTC. I think what we see is a retest of this prior low, and the reaction here is going to tell me a lot about altcoin strength. If I see a strong reaction here, I might choose to size up on altcoins after what I've cut. But what I want to discuss now is the mindset of how you need to think of things and whether you should be buying right now and how to actually play the market right now. Because I'm getting a lot of questions like, okay, the market's low. Should I be buying altcoins now? It's nuanced. I think there are some altcoins which, yes, you can be adding. But I also think there are some positions which you either want to be cutting or not adding. So let's discuss that now. The first thing you have to accept is that the altcoin market clearly isn't what it used to be. Like, let's not pretend it is. This isn't, and we've spoken about this all year. Like, even I remember making videos on this in March, February, about portfolio construction and how, you have to probably hold more stables in this environment, have invalidations, and you have to treat things as trades and hold less altcoins in your core portfolio. Everyone that's been watching my content is probably sick of that by now, but, these are the things we need to remind ourselves when trading the market. It isn't 2021. You probably won't do well with a bunch of alts or holding them randomly. You need to be a lot more considered with how many altcoins you hold. So let's not pretend that it's 2021. The market's different. But that doesn't mean there aren't still opportunities to make money. I think there are. And in fact, I would say crypto still remains the highest upside market in the world. I don't think any other industry rewards an edge through skill, patience, speed the way that crypto does. I mean, yeah, you can go and trade equities. You might make money, but I don't feel like there's an edge there. Whereas crypto is one of the only spaces that you can monitor, a new launch, see that the valuation is significantly under comparables, study the flows on chain, and then, hear a bit of leaked alpha in an AMA and then take a position, and then the market realizes the next day when there's a big announcement and you can make money. Those kind of setups happen all the time in crypto. And that kind of stuff just doesn't happen in other markets. That's why I think it's still, if you're able to build skill in this industry and build nous, and that only comes with time and patience, I still think it's the best industry to be in because of those asymmetries. And even in bad markets, you still see these, narratives running. I mean, look, I didn't catch this, and I'm not saying you can catch everything. That's unrealistic. But ZEC, for example, Zcash, has been on an absolute tear. What I did do actually was I ran you guys through my chart setup the other day for traders. This wasn't something that I spot long, but what I did say, if you remember the video, was that on the daily, you could look at, longing noodle retests. Actually, I think it was 8-hour or 12-hour. I don't know if we ever got it. We only really got one wick down there, but this would have been the trading strategy. So not only really one fill, not a big fill either. So, this would have been hard to get in, but that's fine. It's just an example that narratives can still run in bad markets. An even better example would have been Asta like a couple of months ago. And then we had ICM before that. And who knows what it could be next? It could be AI, it could be robotics. It could be a variety of things, but there are always pockets of outperformance in crypto. And the way you kind of need to structure your portfolio now is like, Bitcoin, hold a few coins in your core portfolio and then have enough liquidity. And I'm holding over 50% stablecoins. And I've been saying that for months, by the way. So this isn't a new thing. You can't say, oh, Mars, you're only saying that now that the market's down. Like, I've said this since the middle of the year. And in fact, people were saying I was underexposed. But even when the market was pumping, I was like, it's fine. Because if the market's pumping, there's so much, liveliness in the market that I can always rotate down and catch trades during good market conditions. So I think you don't need to really force altcoin positioning. And this is a mistake a lot of people make. They're always trying to be in an active long position, whereas you can afford to actually rotate a little bit later once the signs of a confirmed reversal are in. But at least by having a core portfolio, you hedge against timing a little bit. Let's say you time your re-entry into the market really badly. At least by holding a core portfolio, you have some sort of mid to long term exposure, but not enough that you absolutely get smoked when the market goes down. So I think that's an important way to view your portfolio at the moment. I've got a video coming out about that soon, but these have been concepts we've been discussing all year on the channel. Now, in terms of buying, let's get into this now because I'm getting questions, as to whether, people should be buying. Obviously not financial advice. You have to make your own decisions based on your own situation and your own skill level and the way that you trade. But this is my framework. If you believe there's still going to be another big rally, which I think is definitely possible. Like, yes, there's a bear case. We have to be aware of that. But there's also a bull case. And if you think any of the factors in the bull case could trigger one big rally, even if it's only a complacency rally back to prior high, even if it's not those 140, 150K Bitcoin targets that, we thought could happen, and I still think there's a chance they could happen, by the way, but even if you don't think it's that, you could look at positioning in some of the strongest coins, and I'm saying strongest not only from a technical perspective, but from a narrative point of view, and coins that you think will likely have some concentration when the market goes up. Like, it's hard to imagine like a hype or, a pump or, coins with strong mindshare not performing if the market ends up returning and doing well, like a BNB and MNT. Like these tokens, hard to see them not doing that well if the market does go on a pump. These are the kind of things you got to focus on. But if you're going to be buying right now, right this second, and I'll be honest, I'm personally not buying right this second. I just don't feel super compelled to, and I'll go into the reason why in a couple of minutes. But if you are, I don't mind it in some cases, but you just have to be willing to be underwater for a little bit. Underwater in the sense that we can come down to 98, and another 6K drop on Bitcoin is another 15 to 20% drop on alts. So you just have to be prepared for that. if you are going to be buying right now. I still think those could be decent risk reward entries from a multi-month perspective, but you are catching a knife. I'm personally not a huge fan of catching a knife. I just don't handle it that well emotionally. But some people are. I know some friends who just put money in there. They don't care if they're down 20%. They just want a decent entry for the future. Then I think it's okay to buy, but I don't like playing it that way because it's not that mentally fun. Basically catching a knife. Well, this game isn't fun in general. It's not supposed to be, but it's just not nice. It's just not nice being underwater, obviously. And there's been a couple of positions recently where I've kind of botched my execution and I've ended up underwater and had to cut. Like XPL is an example. Aether I front ran too early and I re-entered a little bit prematurely. I still think my re-entry was okay and in line with my system, but maybe like a day too early. So I've had a couple of things which have cost me like 6 figures in the last month or so as well, which hasn't been nice, but it is what it is. Where possible, though, if you are going to buy, and I think especially these coins are the better risk-reward entries in the market, make sure there's clear invalidations on your coin. So at least you can limit risk on the trade. Like, let's try and get some examples now. Like, I didn't plan this, but let me just go off the top of my head. Like, let's look at BNB, because I think that's a coin where you have a key level. So you see how it's dropped past a lot of its H4 levels? Yeah, so there's no clear high time frame on this. Maybe you can look at like a world coin, because I know $1 is a key level. All right, so world coin is an example of a coin. It's bled now. So on this bearish retest, that's a trigger for a cut. If you get a reclaim, that is probably the time to look at re-entering. So if it reclaims a key high time frame level, that is probably your entry trigger, as opposed to trying, to catch a knife to the downside. Conversely, let's pretend, and I'll actually try and find a chart that is at a key high time frame level, potentially hyperliquid. No, that's a bad chart. See, a lot of alts are broken down now. So most of your altcoin setups are reclaim setups. Potentially Link. No, see, Link is one I also invalidated that I mentioned in my Discord post, because you got a clear retest breakdown of that key pivot point at $19. See, there aren't actually that many right now. This is just the reality of the market. World Liberty, probably not. That's going to new lows. So it is a pretty grim market. I think Sui is one. Yeah, Sui's a perfect example. Okay, this is great. We found one. There aren't that many. There's probably, like, if I spent 30 minutes looking through my list, I'd find 2 or 3, but there aren't that many. But coins that you're bullish on, so let's say you're bullish on Sui, this is down into a significant psychological resistance now at $2. Like, this is actually a buy zone for me. I might actually look at adding here. Only reason I haven't yet is because I haven't had a daily close to, like, trigger an entry. It's still been, it's still retesting that zone right now. So potentially you get like a deviation reclaim where you go slightly below and then you reclaim. So you might want to do half the entry now and then half on a reclaim. But like Sui's a coin where you could buy now at a key high time frame level, but you would have an invalidation below. And this protects you a little bit more because you have, a level where you can actually cut your position. Like you could say like 4 consecutive days trading below this zone into, bad order books, or you can have also funding triggers or liquidity triggers. But if you just want to keep it simple, X amount of days below X price, I'll invalidate 50% or I'll invalidate 100%. Those type of entries I think are better. So get a strong coin with a strong narrative into a high time frame level with invalidation, and that makes it a bit easier to trade at the moment, or wait for a reclaim. Because sometimes, and for me this is pretty much the textbook setup right now, you're better waiting for a reclaim than trying to catch a knife in these conditions. And that isn't just triggered by specific altcoin charts. I'll be using that in confluence with a microstructure shift on Bitcoin and the order books. This will signal when I'm more comfortable taking on bigger risks. And of course, subscribe to the channel, turn on notifications, because the day that happens, I'll be doing an update video. But for now, my risks are isolated into multi-month holds with invalidation. I'll show you what I mean by microstructure shift, but of course, this will be something we dive deep into when it actually happens. But if you look at the daily chart for Bitcoin, this has been a chart I've spoken about, a lot on the channel over the past couple of weeks. And remember, I did that video saying that 116 was a key level to get above, and it wasn't good that we had a rejection there. For me, that's still on a low time frame, the major pivot point for Bitcoin. But obviously, the lower we go, you don't want to be waiting for a flip of that level, because if we can get a decent reaction to 98 to 100K, you can set up a nice swing trade into 116. And at that point, the swing might be, 17% on Bitcoin, so 40% on alts. So what I'll be looking for is a test of that zone, see how Bitcoin reacts. Let's say it is like the 100K, 98K zone, which we're going down to now, and we're very likely to retest. And I have this, descending channel that's been in play for a long time, but I've honestly just kept it there because it's been playing out. In this zone here, I'll look for a microstructure, so a lower time frame. I'd even go down. I'm just using the daily for this, but I go down to H4, H1, and look at how things are not only reacting technically in that zone for a reclaim, but I'll also be looking at sentiment at the time, the order books, liquidations, funding. So this is a video I'll do at the time, but I am keeping my eye out. And this is still probably a week or two off, but I am keeping my eye out for a microstructure shift on Bitcoin, because I would trade alts as a proxy to Bitcoin, at least the strong alts that I think have been beaten down, but are strong narrative-wise, for potential bounce setups. And maybe I'll sell those bounce setups, if Bitcoin does deviate and come back up into the middle of the range here. But I'll at least be making some money on that, so I can recoup some of the losses from this period and hopefully make some profits on the bounce, which can set me up for that next period of my portfolio until the rest of the market becomes more clear. So I'm looking for a shift overall to go more risk on, but I do think if you have some sort of invalidation, you can start nibbling on some of the alts. I think another major thing to point out here is I'm still very active with my Degen portfolio. So a lot of this logic, I'm talking about majors or like core portfolio stuff or core trades that are part of your core portfolio. I still have that Degen percentage. It's around 10% right now, where I'm happy to still spray and pray. Like, there are on-chain things where you can't really chart and look at like microstructure and look at order flow and all this stuff, because they're not really heavily on perps. They're on-chain. It might be an AI play that I like. It might be robotics. It might be a prediction market infra play. It might be like a 5 million market cap. I have no worries degening, spraying and praying with 10% of my portfolio that I'm not managing as much. Obviously, your core portfolio might only be 5 positions, but your Degen portfolio could have 15 positions. I'm happy to spray and pray during this period. And I actually think risk reward on this section of the portfolio could be even better than majors, because if the market comes back and if you're in the right narrative, like some of the strongest narratives for the next period in the market, like robotics, X402 AI, prediction markets, and privacy and revenue generating protocols, these sort of narratives, and you can identify a project with strong fundamentals, there can be huge dislocations that represent pretty asymmetric returns to the upside. So actually right now, I think the best use of your time while you're waiting for like a fundamental trigger on a lot of these trades or a technical trigger is actually just researching and really getting into the nitty gritty on the low caps and spraying and praying. Because if the market does reverse and this bull case ends up coming true, or even elements of it, which lead to even just a complacency bounce, you can make a lot of money during that period. As I said before, I still think crypto is the best space to be in. If you remain curious, you stay engaged, and you don't get complacent despite conditions being tough. Because I promise you, at some point, there will be another rally, there will be another 10x altcoin, there will be another explosive narrative, and although it's very hard, all you need to do right now is do whatever you can to survive, to stay in the game, so you're around when that time comes, because the opportunities will still be massive. So right now, and I've got this tweet scheduled for later, I'm doubling down on research, doubling down on building, doubling down on self-improvement during this period, because F prices, you get to control your own narrative and you get to control how you set yourself up for the next period in the market. So hopefully you enjoyed this video. Hopefully it gave you a bit of clarity. Hopefully it gave you some ideas in terms of strategy. Make sure to subscribe for future content. I'll see you in the next one. Good luck in the markets. It's hard, but I am confident that if you stick around, you can come out this side even stronger. And potentially, whilst everyone else is giving up, that is actually where the biggest opportunity lies. Oh, and also, I mentioned percentages on probabilities before, so you might be wondering, Miles, what's your percentage? I said 2 weeks ago, there was a 35% chance the market's topped. It's always a probabilities game, right? So you adjust it based on variables. I would say since then, the only new variable we've had come into the market are the continued selling from OGs and whales and the continued weakness and lack of a bounce on the lower time frames. That isn't a great sign, but I don't think there's enough material evidence to increase that too much. So maybe my thinking's gone from 35% closer to 40%, but it's still not above 50%, just to give you an idea of how I'm feeling about the market in general. But ideally, the way you structure your portfolio sets you up for, okay, if you are wrong, it's okay. It's not going to devastate you. You'll be able to go again in terms of your long-term portfolio setup for the coming multi-month and multi-year time horizon. But you're still exposed enough and you still have enough of a plan in the meantime that if things do recover, you're really well set up to capitalize. I know that's a difficult balance to strike. The way that I've found it is by holding half of my portfolio in stablecoins, but you might find it in another way. Maybe holding more Bitcoin, maybe, isolating the trading portion to a smaller percentage of your portfolio, maybe running a barbell of like Bitcoin, Ethereum, Solana, and then like, hyper risk altcoins. Like there's different ways to structure your portfolio that we can get into in future videos, specifically on my Crypto Edge channel. But I think fundamentally, whatever you can do to stay in the game right now is what you need to do, because I'm doubling down personally on research. I'm doubling down on finding asymmetries and dislocations, because that's what I did in 2022 and 2023. And during that next rally in the beginning of 2024, a lot of my hard work, spotting Ondo and some of the other RWA coins, and some of the AI coins and Pepe, Render, all of these trades were absolutely amazing and really in many ways portfolio defining for me heading into the next period. So I'll see you in the next video. I'll be on the channel with Paradise tomorrow to go through the technical setup for the market, because I did a bit of TA today, but he's better at that. So we're going to go through that tomorrow. So if you want a technical look at entering alts, Bitcoin, and where we're likely to go next based on what the charts are saying, subscribe for tomorrow's video. Peace out.